1. Long Marubozu green candle. The pattern opens at the low and closes at the high, with no upper or lower shadows. This is extremely bullish. It shows that bulls controlled the session without any selling resistance. The sentiment is overwhelmingly positive, marking a strong move upward. However, it can signal a buying climax if it occurs in an overbought market or after a prolonged rally. Always confirm with volume and subsequent price action. 2. Long green candle. This pattern opens near the low and closes near the high with small upper and lower shadows. It reflects strong buyer interest throughout the session, indicating a bullish pattern. The sentiment is positive, but the small shadows indicate some resistance from sellers. It lacks the decisiveness of the Marubozu, and if volume is low, the signal might not indicate sustained bullish momentum. 3. Long closing Bozu green candle. This pattern opens near the low and closes at the high, with a short lower shadow and no upper shadow. It is a bullish pattern, similar in strength to the long Marubozu green candle. The sentiment is strongly bullish, as the close at the high indicates consistent buying pressure. However, it can be a false signal in overbought conditions or without confirmation from volume and subsequent candles. 4. Long opening Bozu green candle. This pattern opens at the low and closes near the high, with a short upper shadow and no lower shadow. It is a bullish pattern, but slightly weaker due to selling pressure near the close. The sentiment is positive, but not as decisive as the long closing Bozu or long Marubozu. Profit taking near the close could hint at resistance, so confirmation is needed before assuming trend continuation. 5. Short green candle. This pattern features a small real body with short upper and lower shadows during a less than average daily range. It is a mild bullish pattern, often a continuation signal. The sentiment is moderately positive, reflecting minimal buyer interest. However, its small size and low range reduce its reliability as a strong signal, so it needs volume and trend context for confirmation. 6. Green spinning top. This pattern has a small real body with long upper and lower shadows, reflecting market indecision. It is neutral in nature, and its significance depends on the prior trend and location. The sentiment is uncertain, as neither bulls nor bears dominate. Acting on this pattern alone without considering the broader trend can lead to false trades, and it often requires confirmation from subsequent candles. 7. Green lower shadow candle. This pattern closes at the high with a lower shadow longer than the real body. It is bullish, as buyers overcame selling pressure to close at the day's high. The sentiment is positive, indicating strength from buyers. However, follow-up bearish candles or a close below its low can negate the bullish implications. 8. Green upper shadow candle. This pattern opens at the low with an upper shadow shorter than the real body. It is bullish, but some profit taking near the close signals mild resistance. The sentiment is positive but tempered by the inability to close at the high. If volume is low or the pattern occurs after a rally, it might indicate waning bullish momentum. The inverted green umbrella candle is a significant candlestick formation, characterized by a small real body positioned near the session's low and a long upper shadow that is at least twice the length of the body. The candle's close exceeds its open, indicating bullish activity during the session. However, the prominent upper shadow reflects a rejection of higher prices, suggesting market hesitation and the potential for a reversal in sentiment. When this candle appears at the top of an uptrend, it is referred to as a shooting star, a pattern with bearish reversal implications. The shooting star signals the possibility of a market top, as sellers regain dominance after a strong rally. Confirmation of this reversal requires a subsequent bearish candle that closes below the lows of the prior two candles. Without this confirmation, the shooting star remains an inconclusive signal of weakening momentum. Alternatively, when the inverted green umbrella candle forms at the bottom of a downtrend, it is identified as an inverted hammer, a pattern with bullish reversal implications. This formation suggests that buyers are attempting to regain control following a period of selling pressure. To validate the bullish reversal, a confirming candle must follow, closing above the highs of the preceding two candles. Similarly, the green umbrella candle is distinguished by a small real body near the session's high and a long lower shadow at least twice the length of the body. This formation reflects bullish activity during the session, with the close exceeding the open. However, the extended lower shadow indicates that prices were driven lower before buyers successfully regained control. When the green umbrella candle appears at the top of an uptrend, it takes the form of a hanging man, a pattern with bearish reversal implications. Despite the bullish close, the long lower shadow reveals increasing selling pressure, which can signal the weakening of bullish momentum. Confirmation of this reversal requires a subsequent bearish candle that closes below the lows of the prior two candles. Conversely, when the green umbrella candle is observed at the bottom of a downtrend, it is known as a hammer, a bullish reversal pattern. This formation reflects an initial test of lower levels during the session, followed by strong buying interest that drives prices higher. For the reversal to be validated, a confirming candle must close above the highs of the previous two candles. In both cases, caution is advised as these patterns require proper context and confirmation to be effective. Acting prematurely, without a confirming candle, can lead to false signals and erroneous trades. Furthermore, the reliability of these patterns is influenced by their location within the trend. Patterns found mid-trend often reflect indecision rather than reversals. Volume also plays a critical role, with higher volume enhancing the validity of the signal. Lastly, in strongly trending markets, these patterns may fail to reverse the direction, as the prevailing momentum may override localized signals. Both the inverted green umbrella candle and the green umbrella candle provide valuable insights into potential market reversals. However, their efficacy depends on careful analysis of their context, confirmation through subsequent price action, and supporting factors such as volume and trend strength.